So the recording starts so that we can continue. So welcome once again, let's proceed. So I want to show you the put setup, and then I will allow you to navigate the chart. I want you to start identifying these things. This will be a business. You will identify these setups, trade them, or come for an explanation why they are working, why they are not working. They do not work 100%, they work 80% of the time, or 90%, okay? So there's nothing like you can expect 100% win rate. No, on average, I get 80% whenever I use this. Now, when you are going downtrend, the rule is the same. Number one, you have noticed on Telegram, I've shared with you the rules for put and call.
Oh, yes.
Yeah, I've given you a screenshot of the rules from my own manual. No, whenever I get a good strategy that I want to trade, I document it step by step. So when you are going in a downtrend, that is candles are below the moving average, that's a downtrend. You start chasing what? Puts. You start looking for lower options. So in our case, in this case, you have to look for a 2-bar reversal pattern of this kind, where we have a bear candle followed by a bullish candle. So this is now our 2-bar reversal pattern when we are going down, because we are expecting a breakout to the downside. So a bear must break a bull. That's what we are saying in short. Okay. So we had this pattern, a successful breakout took place, no retracement. So no setup, no problem. There is an indicator I'm going to give you that once you identify this level, okay, and you notice this candle has broken through, you place a line here or slightly below the line. If the candle comes, touches here, you get a notification, a sounding notification on your computer so that you rush to your screen.
Okay.
So you wait, when you are alerted here, now you can easily jump on your screen and wait for candle to touch here for you to place a trade.
Can I ask why we are there, sir?
Yes.
The retracement has to be immediate. Does the retracement have to be immediate?
No. It has to happen within a few candles, and as long as the trend is intact, not when the trend has reversed.
Like here, just let me draw something.
Yes, draw.
Like here, I can see it failed on this candle.
No, you see,
because now it's up.
Yeah, this is an uptrend. Already prices in the above the line, so discarded.
Okay.
And the rule number two, this is not the most immediate 2-bar reversal. Remember, we started by you identify the most recent.
Oh, okay. So the most immediate is
2-bar reversal pattern.
Yeah,
so you see, now look at this. If you were here, when the market, if the market opened and you were here, where the vertical line is, your immediate 2-bar reversal pattern is here, right? But after the chart kept on moving as time went on, and it's now here, your line moves. This is now your new reversal pattern. This one.
Bullish. Okay.
And as the candle continue move, this is a new one. And as you move on, there is a new one here. There's a new one here. There's a new one here. You get the idea?
Okay. Yes.
You trade the most recent support and resistance level.
Okay.
All right. So this one, if this candle touched here, or this candle touched here, or this one can't touch, or this one touched, all of these candles below the moving average would have been a valid setup. Are we there?
Yes, I'm with you. I just want to ask a question.
Please ask.
Okay. Now, for this section where you have the horizontal line drawn.
Yes.
You see, we have this bear bull candle reversal.
Which one? Which one? You can use the annotate here to draw things.
Annotate. Where is annotate?
Yeah, look, annotate. Find annotate on your Zoom at the top. There's a button called annotate, and then you can pick a tool from there, text, draw, pick something and draw.
Go to view options, annotate.
Yes.
Okay, view options, annotate. Okay, good. Okay, good. See what I'm saying here. This candle.
Yes.
Okay. Now, would I say this is a good bear reversal, even though it's below the 21 MA? That is, will I consider that a call option here, or I'll just ignore and wait until the candle
this one
above the, yes, that one.
Yeah, this is a reversal pattern, yes.
Yeah.
This is a reversal pattern, yes, and you'll draw your level below. Remember, we are doing a put. You'll draw your level below.
Okay. So now my question is, I cannot trade a call around this section.
You are not?
I cannot trade a call around this section.
Uh-huh.
That is, can I trade a call around this session?
I can't hear. You're breaking. You're breaking. Your voice is breaking.
Trade a call around this session.
Uh-huh.
Can you hear me?
He's asking whether you can trade a call around this session.
Oh. No. You don't do. You don't trade calls here.
Okay.
You trade puts. When you are below the moving line, puts only.
Okay.
Remember, that's why we started by saying condition number 1, we are trading with the trend. If you remember, we started with the trend.
Yes.
So because we are below the moving average, trend is down. So the safest trade will be a put.
Okay.
And when market is above the line, you do calls here.
Okay.
I believe that's better now, right?
Yes, it's fine.
All right. So in this case, in this market, if you were here, you would have drawn your level somewhere here, okay, and somewhere here. All right. Remember, this is the 2-bar reversal. This one. So you draw below the candle body. The body is here. Let me use real lines, not my. All right. So you put your line where the body is and where the lowest wick is. Body is here. These are the 2 patterns, the 2 candles, body and the wick. And wait for a candle to open above the zone and close below the zone. Follow the rules. This is not a breakout. The candle opened from inside the zone.
Yeah.
Do you remember that rule?
Yes.
It must open like from outside. So if this candle had opened like this, if this candle started like somewhere here and went down like this, that would have been a valid breakout. But you see now it's starting from inside the zone. That invalidates the setup. All right, so let me move the chart and we'll be able to identify some setups that we can evaluate for potential signal. Now,
so it can also work on M5, eh?
Yeah, I actually use it on M5. I use it on M15, M30, H1. What I want you to avoid is M1. M1 is too rapid. And to be honest, the best time frames are M15 and M30. But if you are quick in reacting, M5 would give you decent ITMs as well. All right, so here we move. I identify a pattern here, my 2-bar reversal pattern, this one and this one. Are we there? And I draw this one. Okay. There is a pattern here and there is a pattern here. I draw my level like that. Now the problem is, how do you see the strength of this candle, the breakout? Tiny.
Valid.
Tiny, right?
Yes, tiny. Yes.
It is a tiny breakout, right? This one, if you are very aggressive and want to trade it, this is the advice. I don't recommend, but if you want to feel like you are aggressive and you want to trade, you must wait for the candle to break above the zone, completely above the zone. You take it from somewhere above the zone, not at the touch, but above. I still don't recommend that setup if you want quality signals. So let's move and identify what a quality put would be. Maybe M15, all right? Let's try to see M15 or M30. The setups are very many. When you open multiple pairs, you'll be able to get your 10 setups every day. Yes. M15 and M30 will give you enough signals every day if you are trading this strategy. Like I said, this strategy for a hunter, you set your signal, you time it, you enter, and you have an accuracy. Like I said, 80%, 90%, depending on market conditions when you are trading this setup. So it's important that you know. Now, tomorrow I'll give you a 5-minute setup, and I think on Friday I'll give you a 1-minute expiry setup. So that now you have variety. When you feel like your adrenaline is not very good, you work with long expiries. When you feel your adrenaline is too much, you see what to do. All right, so let's change, and I'll be able to see, let's get a nice downtrend that can give us some setups. I don't know, because I can see here. Now, there are things you need to avoid. Number one, look at this setup. If you were to look at this setup, number one, apart from it not being the latest setup, look at it, okay? There is a latest setup here. But if the wick is too long, what do you expect? Not very good, eh? When the wick is too long, that's not a very good setup. I will tell you for free. Now look at this setup here, gentlemen. This is a 2-bar reversal, okay? You cannot follow this because the market did not continue going up. Are we there? And this is for the opposite. This is if you were to wait for a call. Market goes up and comes back. This is for if the market is going down. So you draw your zone. Let me zoom it so that you can see it much more clearly. Where were we? No, when the problem when you zoom, you destroy things. All right, so where were we? Here, all right? So we were here. Let me zoom so that we don't lose it again. So we are below moving average. You identify this signal, this 2-bar reversal pattern. You draw your zone, okay? Body to candle, all right? You wait for a solid breakout. There are times, many times, if you see a candle breaking below the level without a long wick, that's a solid setup equally. Here, the wick is too tiny, but you can see a body below it. But the wick is too tiny, meaning there was no rejection from below. Such setups can also give you good ITMs. That's my observation. You just have to wait for the candle to go above the zone, not at the touch. When it is 30% below, you wait for the touch. When it's not really 20, 30%, you wait for it to close above. Let me get more setups. I just wanted to see this, and then I wanted to go and test and start sharing with me your observations. All right, so some more cases. There will be plenty of cases in the market. The only thing you need to avoid is when the touch is happening and the price is above the moving average, like here. Okay? So you identify this setup, a breakout happened, but by the time the candle is touching, we are already in a moving average. Avoid. Such setups you avoid. Ensure that price is below there.
That is not the latest.
Sorry?
Sir, that's yes. The latest.
Sorry?
That would not be the latest.
This one?
Yes.
This would be the latest because this one?
It will be here. Yeah.
Or by the time the market is, we are here.
Yes.
Yeah, but you only trade this level if the market went below it. So remember, this setup is valid as long as a breakout happens below it. All right? And it has not formed another level that you would trade. You cannot trade this because there are no candles below it. So because this one has formed, and this was your latest one, if market goes to the above zone, you can trade here. But if now candles went, if the candles went below this level, let me show you what we are talking about here. If you saw some more candles, if you saw some more after this closed here, let's assume another one went down and another one went down, and now you saw another one coming up. So by the time you are seeing bearish candles, now this becomes a valid zone to trade.
Okay, I get it. Okay.
Yes.
Okay.
Because remember, if you have to do a put, your level, your resistance must be above the candles.
But also,
yes.
Hello. I also see.
Yes.
The most recent will be this one now.
Which one?
This one.
This one above here.
Yeah.
You are in an uptrend in that case. Here you are in an uptrend. You are not looking for puts.
Okay.
Yes, remember you use your support here as resistance in a downtrend. That's why price must break your support so it becomes a resistance when market comes back.
Okay.
And if you are trending up. When you are trending up like here, okay, your level must be above support, above resistance, above your moving average. Like here, you are not going to draw below the candles, you are going to draw above the candles and hope for price to break above and come back. That's the logic. It is the usual logic of the market that the market moves up in an uptrend, comes down, moves up, comes down, moves up. And if you are in a downtrend, then it moves down, goes up a little bit, goes down, goes up a little bit. That's the logic. So a good trader will trade at support in an uptrend and at resistance in a downtrend. But now what I'm calling support in an uptrend is a broken resistance. What I'm calling resistance in a downtrend is a broken support. Is that helpful?
Mm-hmm.
Yeah.
Okay, more setups. Let's just identify more setups and I'll give you time to identify them on the chart right now. I don't want to be doing this on my own. I want you to start doing this on your own also. Even a different pair, AUD USD now. I've dragged AUD USD to the chart. This is a nice downtrend, hopefully. So let's see whether we can grab a setup here. I can see one here.
Yes, I also saw that.
Oh, you saw that very quickly?
Yes.
You mastered the art. You see that now? You draw that, wait for a strong breakout. You see, like this is what I told you. If a strong breakout occurs, the candle is not likely to go above the level. It will stop at the level. Very accurate, huh? So then that is the case. You see, wait for another one. Yeah. If there was another setup here, you see, even here, if you drew your level very well, I think now because of zooming issues, because of zooming issues, you may not be able to see that very clearly. But if you drew your levels quite well, you would see that this candle opened above the zone and closed well below the zone. And the next candle touched, stopped. That was a winner. So there are many setups. This one would be an invalid setup in advance, as I can see here. By the way, do you notice this candle did not go down fast? Did you notice that?
Yes.
It opened and started, it opened here, okay? It opened here, I think it went all the way up, rejected, then went and closed down. There is no wick below. If it starts by going down and then decides to go up, invalid. I told you that. It must not go in the opposite direction before retracing. All right, I was explaining this setup. You identify this and this as your pattern. You draw your line here. You draw another line at the bottom. You can see that. And wait for a candle to break completely below the level. Now, this one did not break below the level. And by the time this one is breaking below the level, we have a new pattern here. Are we there?
Mm-hmm. Mm-hmm.
So you adjust your level to here.
And ignore the previous one.
Sorry? And you ignore the previous one. Yeah.
Okay.
The previous one becomes invalid. Okay? Now, you see one thing that's happening again, this one goes up, but where is it opening from? Where is the candle opening from, the breakout candle?
From the MA, above the MA.
Above the moving average. That is not very good. That's not very good. So you skip such kind of setups. They just give you unnecessary losses. So you have a setup here. You just follow with your two lines. There's a setup here. You can see that. Now, a long range candle, a long wick. Market did not go and touch that level. So again, you know,
hello?
And by the time it's touching, we are in a, above the moving average. So you skip.
And also,
yes.
And also,
yes.
It was invalidated by this other level here.
And there was another one here. There was another one here. Yes, I think there is a new level down here. Now you are spotting these things very fast. There was a new level here. You see that? There was a new pattern here. Broken, touched, ITM. You can see that? I don't know whether you guys are seeing that or I'm the one seeing that. We have a bear bull. You draw level here and a level at the bottom of the wick, the longer wick. So this is your zone. Like I said, shape, pick it from here. You draw it like that. Now this candle opened above the zone and closed well below the zone. Are we there?
Let me ask you.
Yes.
I thought the upper side of the zone should be at the open of this candle.
Which one?
The green candle.
No, it is the body. The body.
The body of the green candle.
We use the lower body and the lower wick in a downtrend.
Or the lower.
Yes.
Okay. Okay.
Yes. But of course, if you want to a margin of safety for a safer entry, you can still target the body of the other candle. That was a gap. The market, you know, the candle closed below, but the other one opened above.
Yes.
It didn't open at the same level. So if you want,
this broker has a lot of gaps.
It is everywhere, even in IQ. There are so many gaps. Go and open your IQ. Markets don't open always at the same level. Actually, they close. It's very common.
You don't find gaps. Yeah.
Eh?
In FXM, I don't see a lot of gaps.
Okay. I will have to check that. So I was saying, for safety, maybe if you want safety, maybe safer entries, you can always include the other body so that everything is inside. But again, regardless of what has happened there, whether you entered at the upper body or the lower body, your candle came there and gave you a signal, an ITM.
Yeah.
Now, I want to give you time, you guys, to interact with the chart. Try to identify those things. And my expectation is after this, I expect you to want to play around with your charts. Play around with your charts. Pick some samples, back test. There's nothing repainting here. So it's pure price action. So you back test and let me know what you are thinking of from the charts, what you are seeing. This is a very accurate strategy if you are able to trade it the correct way. So long as you observe the rules like here. Tell me which rule is not observed here. I've picked this setup. Let me pick this setup and you tell me what is wrong with it. That's a good setup. That is a bear bull, right? I've drawn my level here and I've drawn my level here. What is wrong with this setup?
The candle did not start above the zone.
Which candle? Let's write what is wrong. Number one, what is wrong? You tell me. Number one, price is the moving average is in between candles. Huh? Effectively, we are in a ranging market. Are we aware? This is a ranging market. All right?
Yes.
Number two, the breakout candle started from inside the zone.
Yes.
Not above the zone. Remember, it must start from above the zone for a put or below the zone for a call. Are we there? So maybe I'll identify more setups and then you'll be able to, we'll be able to see even fake ones, fake outs also, fake signals. When you see markets behaving like this, sure, you know this is a ranging market where candles are just around the same level. Here. They're not moving up or down. So when price starts moving above the lines, then you place your trade. So let's see. This is now a call. For a call, I look for a green candle followed by a red candle, and both are above the moving average. Are we there? And I draw my zone like that. A breakout occurs. This candle closed well above the zone, okay? And then you wait for it to come and touch your level. Assuming it did not go up first, then go down and then go up. You need to check that. Otherwise, that would have given you a decent win. Now, if I were to trade this setup also, red, green, where is another red, green? Red, green and red. Eh? So green here and red here. Are we there? This is a solid breakout. Below the zone, candle broke above. Next candle comes, touches the zone, bottom of the zone, that gives you a valid setup.
Wow.
These setups are everywhere. You just need to, one of the things you can do is you can open, you can just open like 4 charts. You can open 6 charts depending on what you prefer. Identify a setup like that. I will give you an indicator. So what you do when you have drawn this line, that indicator will allow you to put an alert on this candle, on this line. So what you do is you don't put your alert on the exact level here. You put your alert somewhere below above the line. So that when the next candle touches here, you get a sound alert on your computer. Then you come, jump on the market. As the candle moves down, you pick the signal. Remember, expiry, close of this candle. Okay? So going down, let me see downwards whether there's a setup. Here is one. Bear bull. Okay? Wick, body, breakout, touch, ITM. Now, don't tell me I'm cooking these signals. They are there on your chart. This Euro, AUD, USD, M15. Another setup is here. All right? Bear, bull. Now, this candle is below the moving average. All right? Open above the zone, close below the zone, touch, ITM. All right? Let's see. Here is another one as we move down. And I think, I don't know that we have looked at this. I think we saw that, but let's see this one, whether it validated. Broke below the zone, touch, ITM. Now, this is what I mean when I say you become a hunter. You don't guess, is this the correct support? Is this the correct resistance? That's exactly the support zone like I'm showing you. That's exactly the resistance zone like I'm showing you. Yes. So what did you think before you start interacting with the chat?
I'm thinking on a live market, it will be easy to identify than on
it is very easy.
On testing.
It is very easy. Even here, I mean, when you are here, we are in an uptrend, correct?
Yes.
This is an uptrend. So where do I draw my level? Here, correct?
Correct.
And here, correct?
On the highest week, yes.
Then I will assume, let's now try to force the market to give us a signal. I will assume another candle, a green candle, will now come open from somewhere here, all the way go up. Are we there? That's a valid breakout because you can see at least 30% or 20% is above the breakout zone. Now, I will assume the next candle, now we are simulating because we don't have a valid signal from the market. Then a red candle comes and immediately touches my level. I enter call. If it's 3 minutes remaining, that's my expiry time. If it is 15 minutes remaining and you are using 30, remember if you are on M30, the valid setup would be, if you look at the rules I sent you, if you are trading on M30, 30-minute chart, your setup is valid if it occurs between 15 and 18 minutes, thereabout. Okay? In other words, the market should not wait for too long before touching the level. It should happen within half of the life of the candle, half of the time. That means for 15 minutes, within the first 10 minutes, it should have touched your level. Otherwise, if it comes very slowly, now you know this from price action knowledge. If a candle is moving slowly downwards like this, what happens? It's going to continue for very long also. But if it comes very rapidly, chances are it will bounce. Now I need to check this because it's I need to renew this. We have some 10 more minutes. So this is the kind of setup I'm talking about. I wish we could get one on a 1 minute. Now 1 minute I say don't do it. Yeah. 1 minute will roast you. Don't trade 1 minute. But I wish we could spot one just for demo purposes that we could be able to see. We just had one here.
Where?
See that? But this is now, this is against a trend.
That's a trend, yeah.
This is against a trend, so it should have gone up instead. In a live market, that should have been a different story. So let me see, Euro JPY, AUD, USD, we were there. I expect this one. Now there's no wick.
No win.
Unless now we do that. Huh? Now it's opening inside the zone. Are you seeing that?
Inside the zone. Yeah, so it's
Yeah, not valid, not valid. And
The
here we have
market is
one.
ranging.
Market is not doing well here. This one, no. Now let's try M5, Euro USD M5. No setup. What you are seeing here is not a valid breakout. I hope you can be able to see that. That was not a valid breakout. The candle did not close above. Eh?
Yes.
So no trade there. And this one, you cannot trade a put here because we are above, we are in an uptrend. Eh? So you don't try to say, okay, my level is here. You know, when you're in a market and you're not very sure of the rules, you will break the rules and now start waiting for a candle to come here. Some of the setups will win, but then your win rate will be lower. Always focus on calls in an uptrend and the puts in a downtrend. That way, your life will be easier. Now, this is not a valid setup, as you can see also, because, all right, well, this, no, we are from here, from where? From here and from here. There's no breakout here. You can see that? Because the candle that broke started from inside. A valid breakout happened where? Here. A valid breakout happened here. Okay? That was a nice breakout. So if you entered that with the safety margins just slightly above the touch, you would have secured this win. But of course, I also need you to be aware of one thing. Okay? If price is very far from the moving averages, it means the price is likely to go back to the moving average. You are aware moving averages can tell you overbought and oversold conditions, right?
Mm-hmm.
When price is too far, like here, candles are too far from the line. Moving averages usually attract price. So when price moves away from the bands, from the line, it tends to go back. Look at that. Went away from the line, went back. Went away from the line, went back. So the moving averages attract price. So price cannot continue in the same direction for long. Okay? And if possible, try to wait for price to actually touch the level, and then you will enter your setup. Or even close above the level slightly for a put, or close below the level slightly for a call. That will give you a more decent win rate, in my view. So I think we don't have much time left. What I want you to do now is backtest this. Go to your chart 15 minutes, 30 minutes, even 5 minutes, but concentrate on 15 minutes and 30 minutes, different pairs. Identify the correct setups, create screenshots, and create your own document, so that whenever you look at the market, you'll be able to spot similar opportunities. My guarantee is the moment you start trading like this, you'll be trading sure shots. You'll be trading sure shots. Look at that. I just saw this one here. Right? See that?
Yeah.
Mm-hmm.
These are sure shots. If you know how to trade them properly and you are patient enough to pull the trigger when price touches your level, most of the time you will be winning your setups. I can tell you. The average is 80%. So again, I would like us to end the session here. Or you think you have questions to ask? Maybe just ask. We have about 5 more minutes. Ephraim?
Yes, my question is,
Yes.
when we create the zone,
Yes.
and then we get the correct breakout. Now
Yes.
for a call option, now we've drawn the zone above the bearish back reversal candle.
Yes.
And then we now get the proper breakout candle that starts from below the zone and then ends above the zone.
Yes.
Now the signal point is where I'm just having a little bit of issue.
Yes.
That signal candle, normally it will come touch the lower part of that zone
Yes.
to go up. now the entry point is the moment that candle touches that lower part of the zone.
Yes.
That's when I'm supposed to enter the enter my trade.
Yes.
Am I correct?
Yes.
Okay.
And you ensure that your expiry is at the close of the candle. So if you don't have much time left, you can skip the setup. And that's why we prefer using this setup on 15 and the 30 minutes. But if you are quick enough, 5 minutes will be fine.
Okay.
Yes. So what I can do is I'll be able to pick a few annotated charts and share with you, so that you are able to see this clearly on your mind. You know, you need to be familiar with setups.
Okay.
You need to be familiar with plenty of setups, so that whenever you spot one, even on M30, I don't think we were able to see many on M30, but M30 will be able to give you valid setups too. I can see one here already. We are in a downtrend. We have our bear bull. We draw our level. We close below the level. The breakout started from above. The next candle touches there. What do you see? It closes below. Are we there, guys? Once you start playing around. Sorry?
What about just a moment? What about this one here?
Which one?
Yeah.
This one, or the one you have drawn a line?
Yeah, we have drawn these two candles. This candle and this candle.
Yeah, they also form a pattern, but I am not sure whether the breakout started from inside or outside. Let's clean the chart and see. You just have to ensure that the breakout is happening inside from outside the zone. So let's confirm. You are talking about this one, right?
No, there are no wicks here.
Which one is it? It was here.
Yeah, that one. Yeah, that. Yeah.
This is a valid setup. Oh, but for this one, right?
Yeah.
Yeah, that's a valid setup.
Okay.
So you see, it's very accurate, but you have to be very precise. Like I said, I think I said this, when you are trading binary options, you must be a handler, a sharpshooter. So you see, like I've already told you, if you see a candle opening, like now this, if I were to consider this one as a breakout, I would already say wrong, because it's breaking out from inside the zone in valid. Okay? This one is breaking from outside the zone, valid. This one is breaking from outside the zone, valid. So if a candle went to touch here, I would enter put from here. So long as it will not be above the moving average. Yes. So it's a very simple strategy. And again, the things I've shared you can see the rules here, right? You can see those rules. You can see those rules.
So the indicator only is for generating alerts.
The indicator I want to share with you is the one, like now you see I've drawn, now this is my current setup, right?
Yes.
Assuming we don't have another pattern like this, bear bull, maybe if it forms down here, I'll have to shift and draw the one below. Or if now price goes up without forming a similar pattern, then I have a valid setup. So what I do with the indicator is I put a line in between the zone. When price touches that line, there will be a sound alert, so that I am alerted and I come prepared to enter when it touches the upper line.
Okay.
Yeah, that will save you. That will save you a lot of time. So thank you, gentlemen, and we'll be able to meet tomorrow for another power strategy. But we'll do a review of this just in case you have issues.
Okay.